Using your playbook, trading report card, and trade log together is a game changer. Each one brings value on its own, but combining them gives you a full picture of your trading performance. When they work together, you learn faster, trade smarter, and grow more consistently. Now we're going to put together everything we've learned in the last 3 videos. So if you haven't watched them, or if you have watched them and you want to review them, make sure you go back and check out those first 3 videos. We're going to now look at your playbook, daily report card, and trade log, and how you use them all together to improve your daily trading. So trading is all about structure, and that's what these 3 things give you. Trading is like a performance activity. It's like sports or chess, and all these require some sort of strategy, some sort of logging for results, and some sort of form of continuous improvement. They also have to deal with your emotion, habits, discipline, and these all affect the results. And so the playbook, journal, and log help you improve your emotions, habits, and discipline with data. So just to review quickly, the Trader's Playbook is a collection of your best setups. It's based on back-testing experience. It involves entry and exit criteria, market conditions, risk and reward, as well as chart examples. The daily report card captures your daily goals and areas to improve. It shows your missed opportunities. It gathers your mental state prior to trading and your emotions. It gives you your lessons learned, and it helps identify your mistakes or discipline issues. Finally, the trade log is really your data engine. And the way that I've presented it, really it's your strategy and the category of your trade and your result are all that really matters. So with these 3 tools, you could build what I call the improvement cycle. So the first step is you trade the plays from your playbook. You record the logs or the results in your trade log. And then based on the trade log, you create improvements and goals in your daily report card. And then you adjust the plays in your playbook based on the trading improvements that you have seen from your daily report pie. And then you start the cycle again, and you keep refining and getting better and better at your plays. So here's a real life example just to make it really clear. So for me, this is a trade that I want to get better called the VWAP Bounce. Now this is a trade I use all the time. And essentially it's when a trade or a stock is in play, moves away from the VWAP and then returns quickly towards the VWAP, bounces off of it and continues in the direction it was going. Now I had clear entry and exit conditions for this. I had clear signals about what my stop should be, where my entry should be, and I was recording everything in my trade log. And this is what I saw in my trade log. The VWAP Bounce was, after a pretty successful trade, it had an edge in that it won more than it lost, and it was making money. But I found its net return was positive. It was pretty low. It only returning about 1.1 R. And I thought maybe there was a way I could improve this, because this was a trade that I was getting right something close to 60% of the time, which is very good. So if I could improve the return on that, this would be a much bigger winner for me. So in my daily report card, what I said is when trading the VWAP Bounce is to enter as close to the VWAP as possible after seeing the rejection. Now this is different than my playbook where I was waiting for more confirmation, but I thought if I could get in closer to the VWAP, I would be closer to where my stop would be. And so my RVR would be much better because I had more room to move, and the distance between my stop and my entry was closer together. So my risk to reward would be much better. So this is what I did in my playbook, and I tried it, and it took about 3 or 4 weeks before I was very consistent at this. But what I found, and I refined my playbook, is that I moved my entry point closer to the VWAP for this trade. I kept all the other conditions the same. In fact, I added a few additional ones to make sure I was only taking the best setups. But from everything I learned trying to refine this trade, I now had a tighter RVR, and so that this trade was giving me a better risk to reward. And I found that in my trade logs afterwards, I was making more money from this trade just by refining it a little bit. So this is the improvement cycle. I had a play. I looked at what the data was telling me. I thought about how I could make this play better based on that data. I went and I implemented those changes by putting them into my daily trading log as my goals about what I wanted to improve. And I worked on that day after day, week after week, until I was able to create a better play. If you found this helpful, make sure to give me a like. And a reminder for all the novice traders, it's a journey. And the only shortcut is to really follow a guide. You have to put in the work. You can have somebody teach you, but you're never going to be able to just step in and start making a lot of money. It's always going to be a lot of work. So just keep at it and you'll get better over time. It's all about continuous improvement.